some of that value may actually be in Europe right now. Joining us with his picks is Jason Brady, President and CEO of Thornburg Investment Management. I saw value and Europe in the same sentence, and I thought, well, it's too early to be drinking. You're on like mountain time. It's like 9:30 or whatever in the morning out there. How are you finding value in Europe given all they're dealing with and all the variables that we just don't know?
Thanks, Brian. I think I'm still trying to parse whether meta-esque is a compliment in this environment.
It's not. No,
with
zero.
Valuations where they are, maybe it's starting to be. And that's really the story here. We look at names like SAP, a global software provider, TotalEnergies, one of our largest positions in the investment income builder here at Thornburg, which is Total is a global energy company. It's trading under 10 times with a mid-single digits dividend yield. This is really a story where there are global companies out there, and they happen to be domiciled in Europe. They're really being tarred with the same brush as some of the more sort of local cyclical companies, and we think that's an opportunity.
Yeah, they're facing a potential worker strike in France right now. By the way, that's the last thing that country or that continent needs. But they're pushing big time into renewables as well. And to your point, Jason, and for our audience out there, particularly maybe some of the newer investors, when things look the worst, and I can't imagine they look much worse in many parts of Europe, that's often the best time to buy long term, is it not?
Of course. And what I would say to investors out there is I'm not in the business of calling the bottom. I've bought the bottom, but never only the bottom. I just think we are now pricing in a global recession, which I expect. The next 12 months, as it gets realized, will be challenging. But CPI is starting to roll over when you look outside of shelter components, which is going to take a long time to work through. And we have, again, valuations, not high-flying tech, not private markets where I think there's been a lot of froth. But we have some really great companies out there under 10 times with mid-single digits dividends. It's just an interesting time, and I think a good time for investors.
Like an SAP, obviously, they're German, they're huge here. We know that. Bill McDermott, they're big. But they're a German-based company.
Mm-hmm. And that's trading at a significant discount, not as much as below 10 times, but about 17 times. That's pretty interesting. Lots of recurring revenue. And I'm just not going to put a black mark against SAP because it's not domiciled in the U.S. Look, you want to compare Salesforce and SAP. They're obviously slightly different businesses, but the valuations contemplate that and more. And so, again, there's lots of value out there if you're willing to look. And it's really because of all the volatility that we've seen due to the huge rise in yields.
The U.S. markets, I'm not going to ask you to call the bottom. We've got a technician, Ari Wald, coming up who can do that. You're a longer-term investor. When you look out 6 months, 12 months, we know about inflation. We know about central banks. That will ease out. What's going to be the next big thing we have to focus on?
I think what you're seeing now is really a strong consumer. That picture is being painted by financials. So you look at JP Morgan, obviously up, 12, 13% in the last few days. What they reported was a little bit weaker earnings, but really the consumer is strong. And this is year on year. The consumer is strong, and the idea that we're going to have a systemic challenge coming from the financial system, I don't see it. I see a liquidity challenge. Again, I see private markets being a real locus of challenge for public markets as well. But that's choppy markets. That's not crash markets.